Welcome back, guys, to another session that's following on from our 5-minute major order flow lesson that we posted, I think last week or the week before. So if you haven't already checked out that 5-minute major order flow lesson, then that is essential for your understanding of this video on manipulation points. So what we're going to do is we're going to show you a diagram and walk through the understanding of this principle, and then we're going to show you real world examples and walk you through how you can begin to use these to capitalize on the trending moves in the market. Right, so you can see we are down here on the diagram section of the chart, if you were, and we are going to be talking about manipulation points. Now, manipulation points as a whole are the areas where order flow changes. So again, we have to have an understanding of major order flow within the market to be able to define where the major order flow is changing from one direction to another. Now, understanding where these points sit within the market is very important, especially for the way that I like to trade and a lot of my students like to trade, and that is because it gives you a clear and detailed view of the higher time frame price action movements without having to necessarily reference the higher time frames. Now, of course, that always helps, but this is how you will define the 5-minute manipulation points within the market, allowing you to find areas within these ranges that will let you follow higher time frame order flow and get the best entry for your trending move. Now, manipulation points, as I stated earlier, are points where price goes from one direction in the market into another direction, giving you a higher time frame low and a higher time frame high. Okay, we will show you examples of this once we have walked through the understanding of manipulation points, or swing points, you can call them whatever you like. So what we need to work out is where we sit within any two manipulation points, because these manipulation points hold high amounts of liquidity. Now, we know that they hold high amounts of liquidity because if we are moving bullish, for example, like this chart is showing you, the market's overall goal will be to run the higher point of liquidity and to leave the lower point of liquidity protected. Okay. Now, we call them manipulation points because generally the order flow is being manipulated for a short term or a longer term move. That is going to be dependent on your range direction and where you sit within a higher time frame. Now, overall, it is going to take time for you to be able to understand these points properly. But if you apply the lessons taught in the last video, so we'll put a link or a little blooper, like a little button for it somewhere on this video and in the description, so check that out. It's going to really open your eyes to what the higher time frame order flow is doing. And then if you aren't already part of the Discord, we've just introduced 2 brand new entry models which allow you to trade within the outskirts of these manipulation points, following the higher time frame order flow themselves anyway. So what does it mean when we see a manipulated low or a manipulated high put in? Well, what it represents is, as I stated earlier, normally an hourly move or a 4-hourly move where it will give you a high and a low. And we know as traders, well, most of you should know as traders, that we like to follow trend, right? And we know which direction trend's traveling in by how the manipulation points are formed. Okay. So let's, for example, say we had a previous manipulation point here and we broke out of that. Okay. That tells us that our last low has manipulated price to go bullish, and then we have another high that has manipulated price to go lower. Now, at this point, a lot of retail will be selling this pair as they don't have a very good understanding of the way that price action is moving and the way the orders are being shifted in the market. But as soon as we have this established, we already know that we've broken above a manipulated high, which means price is traveling up. We also know where we want price to pull back to. So, for example, the manipulated low. Again, we'll go into more detail about that shortly. and then we know where we want price to target, which is the manipulated high. So all you're seeing here is a higher time frame, high to low to high, back down to low, and continuing to high. So if we were to clear off all of the external stuff, pretty simply, higher time frame trend. Now, of course, it's never going to be this clean. We obviously know this, but we will show you some examples of this on the real charts. So when we define where our manipulation points are, it tells us quite a lot about price. It tells us, one, how strong a move is on the higher time frame. For example, how impulsively have we broken previous highs or previous lows, depending on what direction you're traveling in. If it's a strong break, we know that the trend, in this case to the upside, is very strong. If it's a strong break to the downside, we know that the trend to the downside is relatively strong. Again, there's going to be exceptions for these breaks. And really, we are looking for price to pull back to a lower area within the range, so the high and low, and find the point of unmitigated orders and where the most probable area for a reversal is going to come from. Now, if you want to learn more about finding where the banks have placed their orders, please go and check out the video how to locate bank orders within the forex market. Again, we will leave the link for that down below, and we'll put a little button somewhere on the screen for you right now so you can hit that button and watch that if you haven't. And using this as a collective, you're going to begin to make a very clear picture for yourself on any given day. So, what is the purpose of manipulation points? Well, firstly, for us anyway, they give us a clear bias for the day. So if we have a low and a high, they give us a clear bias for the day, which in this case is bullish. Okay. We also have an area that we don't want price to go below, and we have an area that we want price to get to. So we have targets and invalidation points within the market. We also then can identify where the orders sit. So for example, let's draw a quick move here. Okay. We also know, well, if price comes into the lower area here, that you have a very small invalidation area. So for example, if there's an order block here, we want to buy from this area because our bias is bullish because of the direction of the range. It allows us to have a very concise understanding that longing from here is going to offer a better risk-reward ratio because we have a clear area to target and a clear area to put our invalidation. As I stated earlier, we've just introduced two new models that can be used within these 2 points, so your target and your invalidation area, and then obviously your entry area on top. So they give us structure within our day, they give us structure within our higher time frame trend, they give us probability on the continuation of this range movement based on how strong a break is. They also give you a good idea and a good indication if we are going to change direction. Again, we will show you an example of this on the real charts very shortly. So if we do, for example, push down and we break out of this, it changes our bias to bearish. Now, if you have watched the 5-minute major order flow video, then you're probably already understanding what these points are. And you probably already know what the criteria is for the breaks of structure within that major order flow. Now, if you haven't watched it, it is essential that you go and watch it, okay? I'm not just saying it for a couple of views. It is essential for your understanding and your progression using this trading system that you do understand that video thoroughly. And if you don't, watch it a couple of times, okay? So, the criteria for a break of structure when it comes to swing points or manipulation points, again, these are the same thing. It's just a case of this is what they actually are, but this is what they're referred to. Okay, so if we push above, okay, we need to see 2 full candle opens and closes outside of our swing high. Now that means they have to clear the level exactly. They can't sit on top of the level. They have to clear the level properly. Okay. Exactly the same criteria has to be met to the downside. If we break out of here, we have to have 2 open and closes outside of this low. Okay. So we can have candles pushing up to our swing high, sweeping all the liquid off of it, and then pushing back down into here, and we're still going to remain with the bullish bias. We can also have price pushing down into the low here without closing out, and we're still going to remain in the bullish bias. As long as we stay within the high and low of this range, our bias should be to follow that structural narrative. Now, of course, there are going to be some exceptions, and we will go into those in a different video. This is to give you an in-depth understanding and a strong principle for these manipulation points. Okay, so we have now spoke about what manipulation points are. So points in price where you have 5-minute changes in major order flow. We know what they give us, which is a daily bias, for example, because a lot of the time you will see price action playing within a range for the day. Not always, but again, a lot of the time. So it gives us a bias for our trades. It also gives us an invalidation point, so a clear structural high or low to place your TP and your stop loss. It also gives you an area to trade from with the highest probability. And it will give you a clear understanding of if your bias is going to change. Okay, so now that we have spoke about the principles here, we're going to go onto a live price chart, and you guys can see exactly what we're talking about here playing out over the last couple of days. Again, there has been multiple different scenarios that have played out this week, but we will cover the major manipulation points and walk you through. So let's drop down to the live price charts, and we will find some examples of this playing out through this week and last week. Right, guys, so we are now on the live price chart here on British pound to the US dollar. Of course, we're on the 5-minute time frame right here, and we are finishing last week with a change in direction from bearish. Again, you can see when we're bearish because we have swing lows highlighted in red. We have a change from bearish into one breaker structure in the opposite direction. Now, for example, you can see this is where we had a 5-minute low. Price has come up and broken the 5-minute high, okay, giving you a swing low, meaning price is most likely going to go bearish. It's at this point that we establish a swing high with no POI. Again, we're not going to go super detailed into POIs within swing ranges in this lesson. This is more focusing on the manipulation points / swing ranges rather than the actual order blocks or points of interest themselves. We have no POI within this range, which means that there is no concentrated point within this range where unfulfilled orders sit, and there is no point within this range where price is most likely to travel back to. Now, of course, there will be areas within every single range and every single part of price where orders may want to travel back to, but again, we're teaching you a very specific way of reading and trading price here. So after this one break, so what's this, 3 candle break, we knew that we were going to go bullish because our order flow has changed. We know this because our manipulation points are being changed. So we are seeing a visual representation of higher time frame order flow going bearish, then breaking a high, and most likely going bullish. Okay. And we do this every single day, every single week. So we will stand by that, and we know that this is exactly what it means. And many of my students that follow this same system will be able to back this up in the sense that once we break swing in a given direction, if it's opposite order flow, there's a high probability that you are going to continue in that direction here. So after one breaker structure, we knew we were bullish. We identify the last point in price action where it went bearish into bullish. We wait for a counter break against our 5-minute structural move. Again, we broke here. So CB stands for counter break. And that counter break means that it's a break in structure against the already established order flow. So order flow was established bearish here, and we broke the order flow bullish. Okay. We then establish a new swing high by breaking down the order flow once it had established bullishness. So for example, here you can see the 5-minute ranges are moving down within here. Then we go bullish. Then we break down again. So finding the last point where price was bearish, following it into bullish price action, waiting for that bullish price action to break down like so. We then know we have a new high manipulation point, or in this case, target. Why is it a target? Well, we broke a previous high, meaning that if we're breaking highs, we are bullish, and if we're breaking lows, we are bearish. So we have a new target for price right here. Now, in this case, we did have an order block that sat in the lower half of the range, and it has been left unmitigated, meaning that if price does pull back to here, there is a high chance we could see bullishness coming out of here. You can see, obviously, I drew an arrow to represent this, but a lot of the time you will not see price pulling all the way back, and you will see it only partially pulling back. Pullbacks don't just happen every time. If we're following a trend, then expect the expansion, not the pullback, okay? And if we do have a bias, then we're going to try and trade in that bias direction. Now you can see right here, we break that high, follow that back, find your last point where price was bearish. So you can see the last point was here. And then we broke bullish again. So we know this is our swing low and this is our swing high, also our target. And again, we run higher into a new range. Okay, we break it, we wait for price to break down and go bearish, which actually happens here. We follow price back to the last point it broke down bearish before going bullish, which is actually here. And we have a new target in play, and price, surprisingly, does what? Runs bullish again. Okay, notice how we established all of this by breaking one swing high to the upside, which tells us that price is changing its higher time frame order flow, and therefore price is most likely going to change trend direction. Now there are going to be scenarios where price will go break a swing high and then change back to the original direction, but again, this is part of the way the market moves. We can never 100% guarantee that price is going to continue to respect the markups that we put on the charts, okay? But you can already see here through the way we're consistently taking highs and the lows are consistently being left, that we do have a very clear bias here. We continue to break the highs here. We put in a new high, which is then broken as well. Each time we're identifying the extreme or the root of the expansion, which is also tied in with imbalance and unfulfilled orders. We continue to take the targets. For example, here we take this high, we find a new target, which is here. How do we find this? Well, we follow the 5-minute major order flow and we wait for it to go against the current directional movement in the market. Once we have done this, we find the new high. In this case, we wait for it to break structure here. And this big move down causes the breaker structure. So we know where the high is. We know where our low is. Where's our invalidation? Right here. Where's our target? Right here. Okay. And price plays down to the low and then hits our target pretty much instantaneously. Again here, we have a clear swing low after we break the previous swing high. This swing high right here is taken out. We have a new swing high with a new swing low. You can see in this case, we pull back and we actually get a really nice bullish entry, which leads into a huge expansion to the upside and leaves us within a monstrous bullish range. Okay, monstrous bullish range. So what is our bias here? What was our bias for today? Well, our bias was buy. Did we see any buy setups? Well, we actually saw a sell setup for short-term internal structure, and then we saw a bullish setup which leads us into the higher time frame order flow, which can then allow you to target what? The swing high, because this is where our swing high is placed, okay? And we know that price is most likely going to hit that swing high. So let's recap. We need to understand how to read 5-minute major order flow. Again, video in the description. We can then begin to define where price shouldn't come to, for example, swing low, and where price should go to, for example, swing high, which is going to be your target in a bullish scenario. And then we can consistently say that on any given day or at any given time when price is running within one of these swing ranges or manipulation point ranges, that we have a very clear and concise idea of what we want to see from price. Okay, so a bullish swing range gives you a bullish price action movement, and you will find your correlated setups within that range. Again, basic range understanding, like pulling back below the 50%, finding an order block, an area of unmitigated price, will of course help you, but that is what we're going to go into in the second half of the swing range and manipulation explanation and examples. So guys, that has been a walkthrough of how you will read and follow swing ranges / manipulation points within the Forex market. I highly recommend you joining the Discord community if you aren't already a part of it. And of course, if you've not watched the other videos that coincide with this session, then make sure you check them out with the link below. If you've enjoyed this video, hit the like button. If you want to be a part of the community, then feel free to join the Discord and hit the sub button. And I'll catch you all in the next one, guys. Stay safe. Peace.